This is Linda Hitt. We will continue our discussion of the accounting cycle problem. This particular clip, we're going to look at what happens between the input, the journal entries, and the output, the financial statements. In order to get ready for the statements in a manual system, we're going to handwrite, posting to the general ledger, and then preparing the trial balance. Later we'll do a problem. We'll continue our problem. So the general ledger is needed to create the statements. You need to have one balance per account, so this is the place where you can do that. And then the trial balance really is there to check the math, to make sure all of your debit balance accounts do in fact equal a credit balance. The good news is that things like QuickBooks and other general ledger software do these steps for you, so we have less emphasizing this process, but I think it's important for you to do it manually to understand what the computer does. So we will take a look, whoops, not at that, at the general ledger paper. General ledger paper looks very much like journal paper. You can see it's got an extra column there and mentions a balance. So in order to get the ending balance, it captures that. In the old days, we used to have a whole page of paper for each of the different ledger accounts. So you'd have a page for cash. Now, since software does this, and we're just trying to teach the concepts, we're going to replace it with a different type of paper. T's. They are short versions of the ledger. You can see we put the account titles in the top. The left side is the debit side and the right side is the credit side. So they can be small. You can have a number of them on one page so you can quickly kind of do the posting process. So let's look at the trial balance as a document. Again, it looks kind of similar to the journal, but this time you have a listing of accounts titles that you have used during this period that have balances. And all those that have debit balances will be added together. Those that have credit balances will also be added together, and hope the debit side and the credit side equal. With software, this is taken care of for you, so we're not as worried about the math, fortunately. So let's go ahead and take a look at our problem that we've been working on. And let's see if we can get, whoops, get that up here. Not willing. Here we go. So on the left side we have the transactions that we prepared in earlier video clips, daily entries and adjusting entries, and now we're going to transfer the data that we need over to the T accounts, the general ledger, to create one balance per account. As you can see, this is probably not the most interesting step in the accounting cycle, but it's one that needs to be done. So the very first thing we have there is cash and common stock. So cash is debited, don't be creative, it's a debit in the ledger as well for cash. And common stock you would find, and you'll notice when we organized our ledger that one way to do it is to put all the assets on the left, liabilities in the middle, and then stockholders' equity and the temporary accounts, revenue, expense, and dividend on the right. You don't have to do it that way, but if you do, it makes the organization of the trial balance and then the statements a little easier to pull off. Okay, from here we have rent expense and cash. So I would find my rent expense account. I did have to squeeze some out of order down at the bottom to get them all in. And then cash is going to go down, so we can simply credit cash just to the next, you can write it right across from the previous debit. And then prepaid insurance. Okay, debited, increased, and cash goes down because of the prepaid. Cash is going up because of the note, so I'm just going to fill it in on the next available line. Notes payable is going to be credited. So you can kind of see the hang of things here. Land is going up with the debit, so we'll debit it. Cash is going down to buy the land, so credit. Supplies and accounts payable, 500, so supplies. And accounts payable is up here, that can be 500. And then we're down to salaries, expense, and cash for 800. So I'll do the credit to cash to reduce it. And then salaries expense is right there. Next, we've got cash and accounts receivable, $1,500. So next available line for cash, put the debit, and accounts receivable is being credited for $1,500. And I obviously skipped an entry, didn't I? So it looks like I skipped the January 20th entry of accounts receivable and service revenue. Not a problem. We can now debit accounts receivable rather for $2,000, and I can credit service revenue for $2,000. So we'll fit that in. It's not going to hurt anything to get the balances. Okay, so we're down to, I think, cash and service revenue for 4. So cash is going to go up with the debit, $4,000, and service revenue is going to go up with a credit for 4. So you can see it's a very step-by-step process. Dividends, $400, cash $400. So we throw in the $400 credit to pay for the dividends, and then down here, dividends is squeezed in here just to have a spot for it. And then we have cash and unearned revenue. So cash is going to go up by $2,000. And unearned revenue is going to be increased with a credit as a liability. Okay, not too bad. Now we're down to the adjusting entries. Okay, so in the adjusting entries, we use the same ledger that we do for the daily entries. You just keep right on going. So insurance expense at prepaid insurance for $100. Insurance expense is over here. And prepaid insurance was closer to the top. So we've got a credit for the insurance used. And a lot of your expenses sometimes are used or recorded in the ledgers when you do the adjustments. Salaries expense, salaries payable for $1,000. Okay, salaries expense is here. Whoops. For $1,000, and salaries payable is, of course, one of them is a liability and the other is an expense. Unearned revenue and revenue is the next one. So our unearned revenue goes down with the debit, and revenue goes up with a credit. And just keep adding it to the appropriate accounts. Okay, so now we're down to accounts receivable and service revenue. Accounts receivable goes up with a debit, and that's $300. And service revenue is increased with a credit, $300. Okay, and let's see. We have supplies expense, supplies for $400. So supplies is going to go down for $400. Supplies expense is going to go up for $400. And last but not least, we've got interest expense and interest payable. So I'm going to debit the interest expense, credit the interest payable, and hope that I got them all. But it's very easy to make a mistake, as you might well imagine. And I make as many mistakes as anybody. Next, we would want to do the totals for our accounts. Cash is the one with the most activity, usually. So we're going to add up the debit side. All the items are put in. If there's a math error, it's off in here. So I've got 19,500 debit, and then I'm going to subtract the individual credits, or add up the credits and subtract the total. So minus 1,200. If you make a mistake, just double check your cash, because it's very easy to make a mistake. Okay. I've got 11,400. If it's not right, I'm actually going to add it one more time. So let's come down here, and I'm going to, whoops, I don't want to do that. Let's see. Not sure why it's doing that. Huh, I didn't have this problem earlier. I'm not sure what happened to my ledger. I looks like it just reformatted somewhere. Let me see if I can bring that up a little bit. Darn. When I did this earlier, it was not a problem, so I'm not sure. Okay, okay, I think it's going to work now. So there's 11,400. I'm going to bold this so you can see it, and notice it's on the debit side. Again, let's double check. We'll go through and do the ledger, and if it's not right, we'll come back and correct it. How about that? So prepaid insurance, 1,200 minus 100 looks like should be 1,100. Oops, so that's your total. 2,000 minus 1,500, we can actually do it over here. 2,000 added up to 300. 2,300 on one side minus the 1,500, which was the credit, would give me 800. So I can type in 800 here. Supplies, I think I can do that one in my head maybe. 100 difference. Assets should be either debit balances, as you can see, or zero. If you have one entry, you don't have to balance that. So those are the good news ones. Okay, and those are one. We're over here to unearned revenue. So if I take 2,000 minus 83, 1917. Hopefully that's right. Okay, so that's the balance. And then we have a few more here. Over here for revenue, I can do the math for that. Notice that we usually credit revenues, and that's the typical entry. So let me add those up. 300, so 6383, and I'll bold that to make it the total, make it a little easier to see, maybe. Okay, and this salaries expense just has two things added together. Okay, so that's a debit, and we expect the expenses to have debit balances. Okay, so it looks like we have a balance for each thing. It may not be right, but we'll find out shortly. So the next step after posting to the ledger and creating one balance is to do the trial balance. And cash, I've got 11,004, and prepaid insurance 1,001. So no, you can't see that. So 11,004 and prepaid insurance, I've already forgotten, it's 1,100. Okay, let me slide that down. Whoops. Didn't quite get down there, did I? Okay, 1,100. Okay, now we can do them a little easier because we can see it. So accounts receivable, it's fine to abbreviate. Supplies, so these are all the ending balances. Land, okay, I'll come back to dividends later. Let's go back up, and now we're going to have accounts payable. And you know what? I think I made an error. Didn't we pay off accounts payable? So it's easy enough to skip over something. Here's the entry. We have a debit to accounts payable of 500 and credit to cash of 500. So I skipped both of those sides. All right, so let me squeeze that in there. 500 debit and cash 500 credit. Okay, so that's going to reduce my balance by $500. So now it looks like it should be 10,009. Okay, so I need to go back and correct that. This should be 10,009. Okay, let's see now if we get it. So accounts payable is 0. I didn't show the balance, but if the two sides are equal, that's true. And then notes payable is $2,000. So let's come down here and put in notes payable next for 2, and it's on the credit side. And then unearned revenue is 1917. Salaries payable is the next one. 1,000. And interest payable is 10. Okay, and then we'll continue with the stockholders' equity. Common stock is 10,000, and then the revenue is 6383. Okay, so 10,000 for common stock, and that way we have all the balance sheet accounts together. Easier to do with statements later. We don't have retained earnings yet, but I'm going to actually type that in so we remember that it's going to be a balance that will show up soon enough. And then revenue, credit balance of 6383. Salaries expense is a debit balance of 1,800. Insurance expense, debit 100. And supplies expense, 400. Interest expense is 10. And then we're going to pick up, let's see, rent expense. I don't think I've picked that up yet. Again, I just have to move it over a little bit to fit them in. And then I haven't picked up dividends. So you can see all the temporary accounts are at the bottom, which will make up, except for dividends, the revenues and expenses will be on the income statement, and the top will be the balance sheet. Okay, next we need to do the math. And that's always the fun thing, because most of the time it doesn't work out the first time. But we're going to try, and if it does, that's great, and if it doesn't, we're not going to worry too much about it. And that's true for your homework as well. Just do the best you can, but don't spend all your time trying to get the math to add up. Okay, so I'm adding up the debit side. So I've got 21,310. And then we do the credit side. We'll be doing the same kind of thing. Whoops. It's not doing it where I want it to do it. Let's try this again. Okay, 2,000. 1917. Okay, we don't balance 20,410. So what we could do is re-add the numbers. I'm going to start with the credit side. So if I re-add, I've got 2,000. We do it a little more carefully. And you could sort of trace yourself backwards. Do the trial balance, redo the numbers, go back and retrace the posting, and then redo the math and the ledgers. Okay, so the good news is we did make a math error, and the two sides look like they now balance, which is great news. Okay, so that's the only purpose of a trial, is just to make sure the statements balance, the two sides balance. Does it prove that we have no mistakes? Unfortunately not, because you could have left a journal entry out, you could have reversed a journal entry, you could have used the wrong account title. So sadly enough, it doesn't prove that you have no errors, but if the trial doesn't balance, the balance sheet will not balance. So this is the end of this video clip. On the next clip, we will take the trial balance, prepare the statements, and then do the final closing entries at the end of the accounting period.